All right, tax day is just 4 days away.
And if you've already filed your taxes, you may be one of a countless number of Americans wondering, how can I start preparing for next year's tax season? I wasn't.
I wasn't
thinking
either.
that.
No, not at all.
But joining us now with the answer to that question is Thomas Godwin. He's an assistant professor of accounting at Purdue University. First off, Thomas, okay, so is it the smart decision to get started on this now? What are some basic steps that people can do for next year's taxes?
I think, Michael, the biggest thing is planning is really key. I think the last couple of years we've seen some temporary provisions related to COVID that may have surprisingly dropped off. But if you're in a situation where you have to pay tax last year, usually the best recommendation is to check your withholding from your employer. You can always adjust those on your W-4 at any time. And also trying to stay organized during the year, things that you think you might need for your taxes the following year, rather than scrambling for everything at the last minute, because I think that adds stress to what's already a pretty stressful and complicated situation.
Yeah, I can personally attest to that. Scrambling is sort of how it goes at this time of year. But for those people who are not like me, is there anything that Americans should not do quite yet?
I think one of the biggest things here is not kind of overdoing it. Things like all of your income from your employer, a lot of your side income, for things like we'll see the Venmo $600 reporting requirement kick in this year. You don't have to account for every single teeny tiny thing because there's certain forms like W-2s as well as 1099s that will help you in the process the subsequent year and will kind of streamline things a little bit there.
So a lot of folks have already received their tax refunds. Can that refund then be taxed as part of income next year? And if so, what should people be aware of?
Some of the state refunds can be taxed in subsequent years. So if you itemize your deductions, then you could have the potential that your state refund would be taxed on your federal taxes the next year. However, most taxpayers don't itemize. So that's not an issue for most taxpayers. Many taxpayers don't actually owe income tax at all. However, everyone does owe FICA tax, or the Federal Insurance Contributions Act tax, on all of their wages there. I think here one of the biggest things to be mindful of is if you have any significant fluctuations in your income from year to year, certain things like tax credits as well as deductions kind of change how things are treated, particularly for people who are at lower incomes going into higher up income bands there.
And Thomas, some Americans may have received refunds that were smaller than they were expecting. Is there anything different they can do while planning for next year's taxes to change that?
I think one of the biggest takeaways is that in 2022, we saw a lot of things roll off from the American Rescue Plan Act of 2021, including things like the expanded child tax credit. That created a lot of surprises here. So I think we're back to kind of a more traditional mindset of trying to plan early as well as plan often. Also be aware of a lot of incentives like IRA contributions, 401k contributions, HSA contributions, and even college savings for your kids that can reduce your tax bill, as well as to keep an eye out of what's happening. Recently, the Inflation Reduction Act added a lot of significant tax savings available for certain energy-efficient housing or pieces there, as well as electric cars, new and used. So I think watching the news, paying attention to kind of what's developing, because there's been a lot of movement in tax, is really going to be very critical for the next several years, especially.
All right, some good tips. Thomas Godwin. Thomas, thanks so much.
Thanks.